It's time for the July jobs report. The over keeps coming in, Rick. Which is it?
The under wins.
Oh,
the
good.
under wins for the July jobs report. Non-farm payrolls comes in at 114,000. 114,000. Of course, that is the lightest level going back to minus 243,000, which was Dece of 2020 in the pandemic-affected months, of course. Now, if we look at the unemployment rate moved up to 4.3. Moved up to 4.3. That is the warmest it's been since October of 21. October of 21. And if we look at revisions, I should bring that out rather quickly. We see that last month's non-farm moved from 206,000 down to 179,000. Now, let's look at average hourly earnings month over month, up 0.2, 1/10 lighter than both rearview mirror and windshield. If we look at up 0.2, that is the lightest. It equals April. You have to go to February to find a smaller number when it was up 1/10. Let's take a macro and go year over year on average hourly earnings, also coming in light, 3.6. 3.7 was expected. 3.9 in the rearview mirror becomes 3.8. 3.6 going into the Wayback Machine. You have to go all the way back to May of 21 when it was 2.3. So big drops there. Weekly average work week for all employees comes in at 34.2. We also lost a tenth there. Week shortened a little bit. 34.2 equals where we started the year out in January. To find a smaller work week, you have to go to March of 2020 when it was 34, right on the nose. Now, let's look at the participation rate. This is always important. And good news here, we're expanding. We're pulling some more in, 62.7. That equals where we were in April. To find a higher number, you go to November last year at 62.8. And finally, U3 was 4.3. U6, the underemployment rate, moves to 7.8. That is a huge jump from 7.4. I'm going to have to go in the Wayback Machine here. 7.8 would be the highest underemployment rate, U6, since it was 8.1 in October of 21. We see that this weak data joins other weak data in pushing yields down. And what is notable here, and this is big time, 379 on a 10-year. Where did it close last year? At 388. It moves into the black and joins other maturities. That 2-year closed 4.25 last year, and of course it's trading right now at 387. And just to show you how huge these moves are, gang, 386 now in a 2-year. It closed at 438 last week. 10-year at 378, 379. It closed at 419 last week. So you could see these are historic rate drops, and they do portend the easing cycle that may be built in for factors that seem to be all about weakness.